Let's connect now with Sunil Singhania. He joins us live and let's understand from him the shift in the market, what we are seeing from capex to consumption. Is that real? Is this budget something which is going to change the orientation of the budget, like the 2021 budget changed the orientation towards capex stock? Sunil, so nice to have you on ET now. First, let's understand the market reaction. The market reaction should be buy capex, hello consumption. The reverse happened in 2001 when everyone said buy consumption, hello capex. Is the market move justified in terms of what the budget has delivered?
I think overall the budget has maintained what has been the case last 3-4 years. Fiscal prudence, growth of the economy, trying to ensure that middle class gets more disposable income and so on and so forth. And I think to that extent, this budget has continued with that. There has been a little bit of shift for sure. So you have 1 lakh crore going into the hands of crores of Indians because of tax benefit. On the other hand, the budget allocation of 11.1 lakh crore, which was there towards capex, that has not been met. So that has been reduced by a lakh crore, though the next year number is again back to 11 lakh crore plus. So I think to that extent, you can say that yes, for the near term, there has been more relief given to consumers. And in the quest of fiscal prudence, which is what the finance minister started with, that the fiscal deficit will be maintained at 4.8 for this year, will be 4.4% for next year, and for the next 6 years, we will see a downward slope of fiscal deficit number. And I think to that extent, maybe a little bit of more which could have been done in terms of push towards capital expenditure had to be curtailed, because you can't have both. You know, if you are giving away some place, you have to maintain it at some other place. And the markets are markets. You know, in the near term, the markets have.
Have we lost him again? Okay, Kedia Saab is there. We can go to him again. I'll keep the budget away, Mr. Kedia, but I'll talk about in general, how are you feeling about the markets right now?
Just okay, it's a Saturday. What is Bharti Airtel and Jio? Where is that stock? Yeah, we seem to have snapped all the
Vodafone.
nines. And Vodafone, of course. But yeah, you know, honestly, Nikunj, I mean, obviously the volumes are going to be extremely low today. But I think from the key takeaway from all of our experts is, from an equity market standpoint, I think what's bigger is Donald Trump's aggressive tariffs against, you know, major US trading partners. That, along with the RBI, is what's going to dictate the trajectory of the markets from here.
See, Aisha, what do you need in this kind of an environment? You need a stable macro. Stable macro is a function of fiscal deficit. It's an assumption of reasonable tax assumption. It's a function of where you think in terms of the stimulation in the economy is moving. That is more important. Now, more money in the hands of consumer is only a function of if they're earning, they will pay taxes. Yeah. So you have to ensure that the earnings remains, you know, constant from that standpoint point in time. I think what is happening today, the extremes are getting checked, which is that all FMCG stocks have not done anything from last 2-3 years, right? So they were flat and they were due for a technical comeback. All capex stocks have done excellent in last 2 or 3 years, they were due for a correction. So this periodic kind of a change will happen. It is not that the capital expenditure cycle is completely, you know, strong, or it is not that the entire, you know, tax cut is so strong that, you know, we can essentially move things, you know, on the front, so to speak. So, you know, these are things which really need to be associated on that spirit. Is Sunil Singhania back? Is Vijay Kedia back? No. Okay. Sunil, again, it comes back to that same point, that as a portfolio manager, would you start looking allocations differently? Because there is a shift in tonality of the government. So as a fund manager who is looking for options and growth and trend and momentum, would you be looking slightly left rather than right now?
See, Nikunj, you know, for India as an economy to grow, you need to have both consumption as well as capital building to grow. It cannot be one vis-a-vis the other, you know. So I would say just because of one day announcement, will there be a significant change? I'm not sure. Yes, consumption is very necessary, and today there has been a relative significant jump in consumption stocks. But stocks are still not very cheap, and it's not that, you know, this 2%, 3% growth, which a lot of these, at least the staple companies were reporting. is going to lead to a big jump. So I would say that, we would like to assess it properly before jumping to a conclusion. At the margin, anyway, discretionary consumption was something we were looking at because last 1.5 year, there was a slowdown, and at least our view is that with, farm income looking good, with a very busy festival and wedding season, and with liquidity also being easing with RBI pumping in 1.5 lakh crore only a few days back, I think consumption should pick up, and maybe this budget will give it a boost. So maybe slightly, yes, but in the portfolio and India as a market, unless there is growth in capital expenditure, I don't think we are going to have meaningful upsides.
Okay.
But Sunil, do you think this consumption boost is enough to try and lift off the market spirit, or do you think it's going to be more about Trump and what the RBI does next week?
I said it has to be a combination of a lot of things. 1 lakh crore is not, 1 lakh crore is what, $10-12 billion. It's not going to change the trajectory of a $5 trillion economy completely. Yes, at the margin, it is positive. And in a market where, things happen and investors want to react in the same direction at the same time, I think we are seeing what we are seeing right now. But things will stabilize. As you rightly said, we need a combination of a lot of things. So RBI has already acted with infusing liquidity of 1.5 lakh crore. Luckily, the fiscal prudence has been met. So the borrowing program will not be significantly different from what was expected. And I think the yields would stabilize at where they are right now, which is around 6.7%. Hopefully, as the year goes by, we will also start to see a rate cut cycle panning in, not only in India, but hopefully globally also. So I think a lot of these things will combine to get back the mojo with the market is looking forward to.
Sunil, tell me, as an investor, if you were to, looking at the budget, put money afresh or maybe add on to positions in any of the stocks, what sectors and themes would you pick out right now looking at the budget today?
So I would again reiterate that just budget is not going to change your, your outlook differently. But yes, at the margin, discretionary consumption in particular would benefit to some extent. And to that extent, you can have a little bit of tweak. But by and large, I think the view pre and post budget remains entirely the same. On the capex side, there has been a reaction today. I think it's a combination of obviously some disappointment because the investors were expecting something more out of the budget, as also the fact that valuations have been stretched last 1 year in particular in a lot of stocks. So there was a reason needed for them to correct, and maybe this is again one added reason for them to correct. But I would say that we would continue to maintain our positions what were pre-budget.
Gives me great pleasure now to bring on board Mr. Sanjeev Puri, President CII, Chairman of ITC. And before I do that, Sunil bhai, thank you very much for joining us. I know you got a packed diary, so thank you very much.